Hi folks, Joe Bongiovanni here from the Kettle Pond Institute for Debt-Free Money. A few days ago, a week ago, I posted a video that was critical of Dr. Stephanie Kelton's contention, a very broad contention by the modern monetary theorists who say that the that the United States government is the monopoly issuer of the currency. Okay, the monopoly issuer of the currency, and of course they're not. They don't issue any of our money. Okay, they happen to print bills, but it's the private banks that issue those bills, and the only thing that the government issues is coins. So that the money supply is basically issued by the private banks. But in taking them to task on that, I was directed to Warren Mosler's Seven Deadly Innocent Frauds of Economic Policy um, as a means of explaining to me, some of the thinking of the modern monetary theory people. Because Warren Mosler is, I mean, honestly, he's kind of the instigator, behind modern monetary theory. And Warren likes to parade his experience as an investment banker, okay, uh, fixed income security trader, um, and to say that that experience informs his positions with regard to MMT. Well, they do a lousy job. That's all I'm going to say about it. Because one of the basic tenets of MMT, when you look into it, you'll find back to a paper written by Stephanie Kelton. I think she co-wrote it with another author. I'm pretty sure, but it had to do with I think the title of it was something like "Can Taxes and Debt, really fund the government?" or something like that. But the bottom line was that if you really followed the nuances of reserve accounting, what you would find is that there's sort of I consider it to be like a dead end that results in the proof that they can't do it. It has to do with negatives. It has to do with accounting norms. So as to say, well, we can't use taxes. We can't use taxes and debt proceeds to pay for the government expenditures because the accounting don't work right. That's my take on the bottom line on that. So that's not right. So then they say, well, the government doesn't need your money, the tax money. They actually make that statement in various places. And one of the ways that Warren Mosler chooses, often in his speeches, he tells the parable, which is in here, okay, the first one, okay, about the fact that just as proof that the government doesn't need taxes in order to run the government, and that in fact the government spends money into existence. This is the proof of that, okay, is the fact that if you go pay your taxes at a local tax office, which is the only place that you can pay your taxes in cash, if you go and do that, after you pay, and Warren in here says, and they thank you for your contributions to the Iraq War and Social Security. He says, ironically, since taxes don't go to support Social Security, but for some reason Warren Mosler, the fixed income security expert, uses Social Security. But he says after you leave, they take the money and they throw it in the shredder. Okay, that's the proof. And I've seen Warren start out talks saying, "Hey, anybody here ever go to pay their taxes in cash and see what happens? They throw the money in the shredder. Anybody think that that's not true?" And you're going to be an audience of 50 or 100 people, and nobody will say, "No, that's not true." Why? Partly because really, for the one simple reason, which is that modern monetary theory advocates are often the smartest kids in the room. So Warren says they shred it. They don't shred it. They don't shred it. The Internal Revenue Service has entire financial management protocols, regulations, strictly controlling what happens to cash money that's used to pay taxes. And it has to go into the bank. Okay, I'll just give you the bottom line. It has to go into the bank. Now, the bank may find some of that currency needs replacing because it's damaged or inappropriate for continued use, in which case the bank will send it to the Federal Reserve for shredding. Okay, that may be true. And I've had extensive personal communications with Warren on this point, and I know it's not true. I know it because I've read the protocols, the Treasury Department's protocols on cash management. And if anybody wants them, just ask me in response to this, and I'll be glad to provide them in a comment. So basically what I'm saying is, among the 7 deadly innocent frauds of economic policy, one of the most egregious frauds out there is the claim, not the fact, but the claim that the federal government, especially to say the Internal Revenue Service shreds it, like the Internal Revenue Service has the authority to shred currency, But how come? How come this book has been out and been reprinted, I think, and they never correct that, and they never even try to explain that, in fact, that is just a colloquial expression of what happens. No, that doesn't happen at all. You know why it doesn't happen? It doesn't happen because, first of all, we properly manage currency, but second of all, because those balances need to get onto the Treasury General Account in order for the government to spend money. That's the fact, okay, behind the first deadly innocent fraud in here. And there's more. There's more. Thanks.